People will come on. Okay, yep. All right. Okay, welcome everyone to the Export Recovery Panel session. I'm Hamish Conway and co-host today Andy Mitchell and a number of guests which we will introduce very soon, but we've got people coming on at a good clip. So that is excellent. As you come on, if you could please put into so there's two things. One is the chat where you can put in there to say, good morning, hi, I'm ready to go. And the second thing is to be aware of as you look at that control panel down the bottom is for Q&A. So if you have a specific question for the panel or an individual on the panel, you can ask that question there and then we can organize the questions better, because otherwise if you put them into the chat, we lose track of where they've got to. So that is the plan of attack there. So we've got some good numbers coming on. So
morning, Jerry. Morning, Aaron.
Billy, Anthony. You can see everyone's names there, folks, on the right-hand side. So say hi, Heather, because there's 4 Heathers there. So there's John. Cover quite a few with John and Mark. So good stuff. And look, to get, so type into the chat there that you can hear everything, you can see everything. That'll be fantastic. And then we will, I've got a quick poll that we're going to run. Okay, so just to check on in there. So hi, good on you, Mike.
Everyone's arriving.
See you there again. Fantastic. Right. Okay, so I'm going to launch this first poll, and just Andy, just double check on me here because we've got a few polls here. Just make sure we've got the right one. This is around cash flow support, and this is like when I do these polls here, they are anonymous. Okay, so we don't know who's answered what. Okay, so just keep that in mind because some of these questions might. You might be concerned about that, but do not be. We can't see in any of the follow-up reports, anything like that. So the first question I'm going to launch here is, as we are, a couple of weeks into lockdown and some businesses are more impacted than others, but we're talking about cash flow here today, fixing your cash flow. So here's the first poll. So can you see that? Can you see it?
Yep. We are.
Right. Okay, so do you need cash flow support to survive right now? Yes, no, maybe. So I'm interested to see where this lands.
Just to take the temperature of everybody out there.
Yeah, just a bit of a temperature check. So we're getting there.
John as well, some familiar names in there.
Yeah. Good stuff. Fantastic. All right. So, Andy, just while we're waiting for that, I'll hand over to you to perhaps do the introductions and we'll take it away.
We'll take it from there. Well, a very warm welcome to everybody, and thank you again for joining us on Survive to Thrive, which is a weekly webinar by New Zealand's exporters for New Zealand's exporters, as together we track a path back to some form of business as usual and prosperity for our businesses, for our community, and for our country. In Auckland, I'm Andy Mitchell. I'm a growth strategist at Catapult. We're an organisation that helps companies to understand their overseas markets and to take right risk. And in Wellington is Hamish Conway. And we're very, very lucky today to be joined by a fabulous panel from across the country as we try and tackle the most pressing issue that you are thinking about as exporters today. So without further ado, Hamish, do you want to tell us what the outcome of that poll was before we move on to the panelists?
Sure, I'll launch that. So it's share results here. So it's encouraging there. Look, there's just over quarter are like a yes. Half people are a no, and probably maybe is there for 20%. So that's encouraging at this stage. I would suggest. I know, I'm not sure what the other panelists will say, but anyway, that's an interesting indication.
Okay, it's an indication of everyone's state of mind out there. So let's meet the panelists who have given up their time in their hugely busy schedules to join us today. I'm going to start with the picture that's in the middle of my screen here with Nadine. Nadine, please introduce yourself.
Hi everyone, I'm Nadine from New Zealand Trade and Enterprise. I work in the investment team. We work with companies to support them raise capital, and at the moment we're really focused on cash flow and are holding cash flow clinics with companies around the country really to understand their liquidity requirements and providing them support into ensuring their liquidity over this somewhat difficult period.
That's wonderful. Welcome. Peter.
Hi, so I'm Peter Rowe. I'm from the New Zealand Export Credit Team. We're part of Treasury. So the New Zealand Export Credit Team, our role is to support exporters. We provide guarantees to banks to help with working capital. And we also provide insurances to exporters that their overseas buyers might pay, where the private sector might not be able to because of capacity constraints, etc. So we work with a number of exporters trying to help them get through BAU, but right now we're seeing huge changes in what their issues are.
Yeah, wonderful. Thank you. Welcome, Peter. Lance, please introduce yourself.
Okoto, I'm Lance Wicks. I'm sitting here in Auckland. We have a fund called Punakaki Fund with 15 or so companies, and obviously we work with other companies too. But there's a wide variety of reactions to COVID-19 that have happened. Some of the companies are doing extraordinarily well right now. Some of the companies are seeing all their businesses fall away, and we've seen a variety of responses to that as well. So we help companies in different ways, and I've seen a few cash flow crises in my time.
Thank you, Lance. That's wonderful. Thank you, Timothy.
Was that me?
That's
talking. Yep, great. So Tim Mixon, I'm head of tech industry at BNZ, and probably similar to Lance, seeing a mix in the tech industry around upside and downside in the current environment. And I've got a second hat at the moment, which is part of the core COVID-19 response team for the business and consumer bank at Bank as well. So.
You've definitely got your hands full at the present moment. Tim, welcome. It's lovely to have you on the panel. And last but very much not least, Simon.
Yeah, kia ora koutou. Simon Ansley from NZT Investment. Work with Nadine. Our team has been working predominantly with sort of startup and growth capital until about a month ago, and then pivoted quickly, like a lot of businesses have to do, into triaging cash flow and cash flow needs for companies in our sort of exporting portfolio. So we've sort of triaged over, I think, 70 or 80 companies in the last 2 weeks. We've got a really good understanding of some of the immediate needs, and I guess also now looking at sort of the medium-term needs of companies in terms of cash.
That's wonderful. Thank you. Thanks for joining us, Simon. Just want to reiterate what Hamish said before. If you haven't joined us on one of these sessions, then we try to make as much time as you possibly can for your questions at the end of the panel discussion. So please look at the bottom of your screen, and as your thoughts trigger into your minds and you want to leave us a question, just go into the Q&As and leave us a question. Any other comments that you've got live, we've got our eyes on the panelists, but our eyes on your chat as well, and just send through the things that you're thinking about on your chats, because it's really important for us to take the temperature of the room. So this is as interactive as we can possibly be. But I'm going to first turn to Simon to kick off the conversation here and go back to the cash flow clinics that you've been talking about, because I know that you and Nadine and the whole team have been flat out doing these clinics for the past few weeks. Could you just give us a few observations, please, on what you've been experiencing with any common problems which exporters have been facing with their immediate and short and medium term cash flow needs?
Yeah, I guess, these conversations are quite intimate. So, at first we really try to understand the needs of the particular company. But as we've gone through this, you're starting to see themes around, specifically around sector, but also themes around customer and market. So I guess sort of a lot of CEOs and CFOs are on these calls. What they're wanting to understand is not only the application of the current context to their business, but but what are the norms that we're seeing in the marketplace, and what are some of the key themes, and how are other people trying to deal with some of the issues that they're grappling with? And of course, in the current context, most of these people are sitting like we are in various parts of their houses and somewhat isolated from their own teams, and I'd say definitely isolated from I guess the rest of New Zealand and the corporate world. They're probably quite close to their customers, well, they should be. So I guess in terms of that, what we're trying to do is provide some context to them about what we're seeing, what we're hearing. And I guess the immediacy or the immediate things we're trying to get companies to grapple with is, what is your current cash position right now? And really focusing on internal sources of cash within that position. So certain levers that you can pull as a CEO and CFO on your cash position. And, I don't want to get too detailed on that, but essentially looking at, I'm sure many of you are already doing this, is on the balance sheet side, what are your debtors and creditors positions, and how are you trying to manage those effectively and also responsibly? The last thing we want people to do is to shut up and just stop paying, because that stops the system of money going around. But what we are encouraging people to do is be strategic, identify your key creditors, reach out to those creditors, and firstly, understand if they're impaired or not. And if you feel like there's some negotiation there in terms of extending out your creditor terms, then by all means negotiate and communicate with those key creditors. On the other side, on the debtor side, what we're seeing is lots of companies, and it's quite simplistic, and definitely we've been trying to coach this, is are using a system on those debtors. So using a red, orange and green type of model. So red is obviously impaired. They are impaired by the current situation. Orange is, we're not quite sure, it could go a couple of different ways. And green is, hey, these are gold standard and not impaired debtors. And even a step further, you can start to put weightings on those various colors and create some certainty around your debtor book in quite an uncertain world. So that's sort of the first thing we're trying to get people to do, is understand their debtors and creditors position.
Excellent, thank you, Simon.
Can I just add to that, Andy? Am I able to interject? And the other thing I think that's great explanation, Simon, is companies' business models. Obviously the first thing is the liquidity requirements, but how is this crisis going to impact their business model from a longer term perspective? What do they need to do? And we've seen some great examples of companies already adjusting their business models to benefit from the COVID-19 crisis, in terms of, I just see FaceMe has launched a digital health consultant, Release is another tech company that's providing data to real estate companies on the commercial, how this crisis is affecting leases and the lease payments and lease tenancies agreements. So, really focused on what, because this is going to, it's obviously going to be quite a big difference after the crisis, whenever after comes about, and so what's a new sustainable business model for each of these companies?
That's a really nice thought. This idea of uncertainty has been with us for the last couple of weeks with all the conversations we've had. I do want to just go back to the point you made about the feeling of isolation at the present moment, and cash flow problems of all things create a huge amount of anxiety for quite understandable reasons. And when you're isolated from your colleagues and isolated from normal business, it can feel much bigger. So to you, Tim, from a bank point of view, it's like, why is this time so much more difficult for people to approach their issues with the bank than it might normally be?
Yeah, I think from a bank and client perspective, it still comes down to building trust. So always information flow is key, right? And it's become more crucial than ever to keep close to your bank and to explore the options that you have. And for us, making sure that we're getting clear on information, and the key one, and Simon touched on it as well, is just to having a plan in place, right? So what levers are you pulling now in the short term? And also, what's your plan and pathway forward? And I guess what hypotheses are you testing to get back to your business as usual and business as new normal? But broadly for us, if a business was trading successfully and with good people involved, we're looking for every way that we possibly can to support them through and buy time, right, until there is more certainty and it gets to a point where there's some, I guess, signs that they'll get back to some form of normality, whatever that may be.
Yeah, I mean, that path to certainty has been big in your thoughts, Lance, recently, hasn't it? In some posts that we've read from you quite recently, you've been talking about the 3-phase approach, where you're planning for increasing certainty, so you can only deal with the certainty you've got right now. Would that be a useful framework for people to understand, if you could summarize it?
Yeah, sure. So we see that, or I see that there are 3 phases going on here, and we're talking about cash flow, right? So this is about forecasting. You've got to have a really, really good grip of where your cash flow is going, and some businesses it'll be daily, others weekly, sometimes it's monthly, or even longer. Depends how bad things are. If you're on a daily cash flow crunch, that means your business is in peril, and you should be looking at every single check that goes out. And your job here is to survive. Simple as that. Survive. Stop paying your rent. Stop paying anyone who's got equity exposure to you. Pay your suppliers what you can, talk to them, they're in the same boat too. Just get through. Work with your staff to make sure that as many of them as possible can keep their jobs. Drop salaries, make sure that people can pay their bills, get them to stop paying their mortgages. The people that suffer in this phase are the people like us. The equity suffers. People that put money at risk into your business are the ones that should pay. And the last people that should suffer are the people who are earning a good wage, especially the lower wages. So that's your job right now, survive. And it's day to day, it's war out there. You need to make major cuts if required. You just got to get through, preserve the cash, make money, and see how long this phase lasts. And this depends on what your exposure is to different markets too. If you've got exposure across a range of different international markets, you need to have a good understanding of where they are in their lockdown phase. So if you look at Vend or Timely's websites or OpenTable, they're actually showing stats on revenue from their customers in different markets across the world. And you can kind of see how catastrophic this is for some markets. So that's the first phase. I don't know how long it's going to last. And I do know it's going to last at a different length for each market. So you're kind of, ultimately you will probably be burning a bit of cash, but your job is to make that last as long as possible and have plans in place to keep cutting, to keep getting through, depending on how long this thing lasts. And ultimately that might mean that you're a much, much smaller version of yourself. Second phase, or the second part of that, I would say is life under COVID-19. So think Australia or the kind of way Singapore was operating, where businesses or alert level 2 or 3 in New Zealand, you are in business, you can do business, but times are different, demand has fallen away, and you've got to kind of pivot towards COVID-19. How can you help in this new world? So you've seen a few of folks like the food suppliers in New Zealand that supply wholesale outlets have stood up retail websites. That's the sort of thing that you've got to start doing. And we're seeing a lot of our companies doing the same sort of thing. And then that stage, you should be at least revenue neutral. Profit neutral. We should cash neutral. We shouldn't be burning cash, because this could last a long, long time, or it could last a week. And at the same time, get ready, because the third stage is the most important stage. Once you survive, that's the thrive stage, or the we're back. New Zealand might put up a wall and stop this thing from coming in a serious way in the future. Other countries won't be so lucky. It could be a long time before we get a vaccine. A lot of people could die in some jurisdictions. It's going to be bad. There's a recession, probably a depression, almost certainly in my mind. So in that new world, how's your company going to win? And you should be developing your products and services and marketing in the next month or 3 or 10, in order to get ready for that market. So you're cashed up, ready to go, and can kind of accelerate your growth much faster than it was before. So the 3 stages: get through the first stage, the panic phase, the crisis phase, survive or sort of prosper or thrive during the middle stage, and then get ready to go in the third stage. So I like forecasts that have those 3 stages, but I cannot tell you how long each stage lasts. So I think that's the key here. You can't do a yearly budget.
All right. So it's actually, you have to budget in 3 stages, but there is actually no timeline against each stage. So from the listener's perspective here, Lance, does this mean that they need to be speaking to different partners to prepare for each stage in advance? And should they be having that conversation now?
I mean, I think it's something you got to lean on yourselves to do these sorts of things. But I think most companies would have done elements of this. All I'm trying to do is break the time part of budgeting and just sort of and realize that you got to control what you can control. And yeah, that's all I'd say. And obviously this depends, as Simon said earlier, it depends a lot on your sector, your business model, as Nadine said, around who your customers are, which market you are. So every company's got a different version of this. Yeah,
absolutely. So in terms of like starting this journey to try to get through the survive phase that Lance has talked about, where do you turn first for support? Where's the easiest first step? Nadine, have you got a perspective on that?
Yeah, so preparing, I mean, there's lots of webinars and lots of support, and we're holding Cashflow Clinics, so I guess we're quite biased towards our own Cashflow Clinics, but we work with your own management and shareholders in terms of that planning phase, doing a daily cash flow to see you through that liquidity crisis, which are the expenses that you can cut, where are your liquidity caps, what other revenue sources can you consider? And I guess, yeah, so the first point of call is with your shareholders and your management team to work out a plan. And then the next step is to go to various providers such as your bank, because they're going to be crucial for a lot of shareholders, and then other government support and agencies like the RBPs, etc., and Export Credit Office that can also provide support. But yeah, firstly, your management and your shareholders. Secondly, your bank is critical if you've got banking relationships, and then thirdly, your support agencies.
If I could jump in. I think you forgot the board as well. So especially the older looking folks, those people with grey beards and no hair, who've got a few scars.
I guess I meant the shareholders, the board.
As the board, yeah. But the ones that have been through a few crises, I mean, I've been through a bunch of crises, and this doesn't feel that crazy to me. It's as crazy as it sounds. Whereas for some people who have not been exposed, in New Zealand, we're very well situated. We're pretty good at crisis moments. But so lean on them too, get them to, earn their keep or biff them out.
Peter, can I just turn to you for a second then, just for your reflection on that? I mean, this is huge because it's affected everybody. But what are your thoughts on Lance's point there, that actually as crises go, then this is something which we can control and weather?
I mean, I think Lance is kind of right in terms of we're quite well protected in New Zealand in that we can shut down our borders and eventually COVID should stop. We should get it under control. We're also really lucky in New Zealand that, we've got good, strong sort of financial institutions and that we've got a really good, strong exporting market. The exporting part of our economy is pretty strong. And most of the exporters seem to be surviving reasonably well. Those in the primary sector, anyway, we're hearing, still good volumes of base exports going out. There's a lot of sectors like tourism that have been obviously very badly affected, but we do actually still have the ability to recover there. So, it's probably been worse. I think, the GFC was harder because the banks all shut up shop, right? They couldn't lend. So, I was in London then, and that was a totally different picture. This is more scary because it's different because we're all at home and we can't talk to each other as much, and we're relying on these sorts of environments. So it's easy to feel isolated. But I think we're all coming to grips with that, and we're all learning to do stand-ups and to reach out to people and learn to connect this way. That's probably the biggest change. That's what's different with this one.
Well, let's follow on that theme then of connection and swim over to Tim here, and actually start to look at what the options are. Tim, can you just give us your perspective of when the right time is for exporters to start the conversation with their bank, and actually from your perspective, the journey that you'll take them through to be able to understand exactly how and if you should possibly intervene and help?
Yeah, sure. So I guess the first point is hopefully exporters have been talking to their banks already. But I would also say whatever we do, you still have to pay for in some way, shape or form down the track. So there is a mix of options, right, in terms of equity shareholder providers and bank debt, and it might depend on some of those factors that Lance was talking about in terms of recovery and how long it might take for you to be able to trade back to break even and beyond. So we, even before the business finance scheme was announced by government, were quickly in touch with all of our client base to try and work out where they were at, how their revenues were going, what levers they had in terms of reducing cost base if they could, and then exploring options. And from a bank perspective, it's really been around first up getting some temporary funding in just to buy some time to work things out if that's the time, and then there's all the way through to where you're exporting and shipping's delayed or payments aren't coming through, making sure that we're accommodating in terms of buying time around those. And for a lot of businesses, it's been deferring repayments on loans that we have in place at the moment, so principal repayments mainly. Again, it does cost more in the long term, so it still has a flow-on cost. So a lot of the conversations have been quite balanced. It's sort of, here's the kind of options that are available. Please take it away. Make sure you're talking to your advisors that you trust, your boards, and just having a think about whether this is the right option for you right now. But we're happy to accommodate if you think it suits your business. And I guess the other part for us is we got a really clear view on businesses we think we're trading really well before COVID-19 came along. Right up until February, and so our first priority is to make sure that we're supporting businesses as best we can that were successful before and will be successful again. Obviously, with the time uncertainty in terms of how long things will take industry by industry to get back to some sort of normality, or for revenues to start up again in some, we've got to make a call on whether we can provide enough funding to see it through alongside other options that companies have.
Thank you, Tim. So on this, on the point of balance which you made there, then independent perspective, I think, regardless of whether it's grey hair on the board or whether it's your bank partner looking at this, independence is critical, and that's certainly something which you've been driving, Simon, isn't it, through the clinics you've been running at NZTE? Could you just give us a quick run through of when we should get in touch with NZTE for that sort of support, and what the process is, and how we should be prepared for that?
Yeah, like this. I mean, I just want to make it clear. You know, NZTE is not the top of the list when you get into crisis mode. I think the people that Lance and Nadine spoke about are the top of the list. But as you work down that list, you may want to get some independent advice and also free. So if you're talking about sources of cash, becomes really important. And I just want to make it real clear, there is no silver bullet here. Tim's bang on. You've got to be careful of extending credit or pushing credit out to a point to create a pinch at another place. So there is going to be, for any one business, there is 100 small solutions to you getting through this, say, crisis phase. And then there will be 100 more things you need to deal with to get through into recovery and into thrive, using Lance's language. So what we've been trying to do is, I guess, provide a mix of one-on-one. Personally, I think that's where the value is. I'm not saying value is not one-to-many, because we're doing it right now, but if we really want to get granular, it's helping one company at a time. And that's what my team does best. So I just try to focus on that. I think it's really important. Every government agency or anybody that purports to add value focuses on what they do best. And it's the same with a company. Focus on what you do really well and execute. So one-on-one advice and supported by some guidance. So I'm just popped up a website that onto the attendees. It's a specialist COVID page, advice to exporters. On that page, there's actually a section on cash flow. It basically gives the simple form versions of some of the templates and documents that we've been working through with the customers, the companies. There are some other long form documents that aren't on that website that you need help to drive, and our team is more than happy to help you drive that, along with your advisors or your boards or the grey hairs that Lance talked about. There is no wrong time. It's basically it's an opportunity cost discussion right now. I'm all about self-help. So if you can get what you need from people that you trust, and you need to focus on internal, I can't emphasize enough, it's your internal source of cash flow. Lance is right. You've got to take responsibility for this. No one's really going to help you out here. And those that do that well will be the ones that get through. Sticking your head in the sand is not an option right now. You have to go hard. You have to go hard on your working capital position. You have to go hard on your costs. But that also all needs to be done within the context of top line. The worst thing you could probably do is cut costs that you might need to execute a pivot in revenue.
Yeah.
So that's about understanding your impaired revenue lines, and then about understanding the opportunity, and then managing your costs going down. So just, there's never a right time or a wrong time to contact NZTE, and we can help guide you through a process, but we are not your sole source of truth.
Yeah, thank you. That's it's like what I'm picking up here is that we have to be careful of looking for a magic bullet and looking for immediate solutions, and credits is not that, because it depends on this. It's our ability to plan and use the structure, like Lance pointed out, that enables us to understand the intervention we need at different times. Now, moving to you, Peter, then plainly your office has got has the ability to intervene and to support, just as Simon was saying, at a time when you need to be growing top line, not just worrying about wholesale trimming of costs and operations. Could you just explain broadly for all our attendees here how your office operates and how it could possibly intervene when you're thinking about planning for your future 2 or 3 phases?
Yeah, absolutely. So Export Credit, we're part of Treasury, so we're part of government, and we're one of the sort of government support agencies there for exporters. So we've got a range, as I said, of insurances and guarantees that help the exporters with cash flow, mitigating payment risk, or even scaling for growth. So we've supported about $3 billion worth of exports to 90 different countries. The way we do that is in partnership. So we don't fund, and in fact, we've got a pretty small book, because what we really do is sort of add capacity to the private sector. So if we talk around working capital, so a scenario there, if you've got an opportunity and so you secure a contract, and you've got to pay your suppliers before you get paid, and this is a big opportunity for you, your bank might say, great, we really love that, but we actually just supported you to buy something else last month, or we've just fitted out the factory, or we've just bought something else. We've kind of already gone in for you. What more can we do? They might need some additional security, and that's where we come in. So we can work with the bank, partner with them, and provide additional security, additional guarantees to the bank, so that they can provide additional lending to support you. So that's about providing capacity. And again, look, what we're seeing right now is that capacity is coming in different forms. People are saying that we've got working capital holes, and we're trying to bridge them. And look, right now, it's pretty hard to add value to what everyone else has already said, because they've covered it all off. But cash flow is critical, right? Because the cash flow tells you the future. It's your sort of crystal ball. But it's also the most important tool, because you've got your cash flow, and it tells you whether or not you'll be around tomorrow, whether you'll be around next week, and what things you might need to adjust, whether or not it's your payment terms or things like that. So look, it's really important. So for us, when we're looking at people, we look at the cash flow. It's the number one thing we assess. The other thing we can do is work with people, because the biggest uncertainty people have is, are we going to get paid? Are my clients, are they red, are they amber, or are they green? And how many of those green ones are we comfortable with? The red ones, what are we going to do about that? So that's, you've got to talk to your clients. But what about new clients? How are you going to treat them? So if you do get through this and you are recovering, or you're looking at existing book where there are sales, how can you protect that? Do you get cash up front? That's a great way of doing it. Improves your cash flow too. Can you get letters of credit? Or do you look for things like trade credit insurance? So we work with a lot of the insurers in New Zealand where they can't provide insurance. We might look to provide it, or we top up for the private sector. We add additional insurance on your buyers, and that gives you certainty you'll get paid. That's also really helpful for your conversations you're having with a bank, because the bank tends to like debtors who are insured, because the bank then knows that if the debtor falls over, the insurer will pay. And that might make it easier for the bank to work with you and provide additional liquidity. And hey, we're back to cash flow, and cash flow is kind of the most important thing right now. So yeah, we do a lot of work with companies where we're insuring their overseas buyers, and the benefit of that insurance goes to the banks, so the banks can provide additional funding. So yeah, look, we're all about just trying to help exporters, and right now working capital is the most important thing for them.
We just go back. Thanks, Peter. Can we just go back to your observation there about onboarding new clients and understanding the risk? There's going to be, as everybody moves into Lance's second and third phase, there's going to be a huge number of small pivots and connections with new companies coming on board. Just open question to anyone on the panel. It's like, so how should we really approach like understanding the potential risk that the necessary new contacts actually bring into our business? Has anybody got any tips of how to approach that?
Shall I finish my thing and then I can mute myself? But I think with new clients, there's two parts to it. Is in the world we're in, it's all changing in terms of your contracts. So, are you selling X works, or are you getting paid once? Does your credit period start once the goods land in the States? And then do you have the risk of shipping? So those are things that people now have to think a bit more about that they haven't previously had to think about. So that's really important. And then the other point you highlight is credit risk. So I think another important thing is when you're looking at a new client, and if you are offering them terms, what risks are you taking on board in terms of your cash flow? Because you'll still have to pay your suppliers, even if your buyer doesn't pay. So that importance of understanding a customer, getting to know them and doing some checks of some sort is really, really important. And that's where things like trade credit insurance can be of assistance. But
I'll just jump in here and I think we should pivot to answer some of these questions, but one of the things about dealing with overseas folks is that they're often intermediaries as well. So we've got one company who deals with a very, very large company in the USA, but they deal through an intermediary, and that intermediary has been able to guarantee us cash much earlier than the company who puts you on 60-day terms can do. So there's things like that and then we've also used a big global company to pull strings to get parts to us earlier, to get things expedited over here and over there, to use that muscle. Because often in New Zealand, you're a tiny little company relatively to the scheme of things, and you can't get things done very easily. But I do think if we could turn to the questions, and I'm going to answer the factoring one.
Yeah, go for it.
I'm a big fan, and you've got bankers here who probably may or may not disagree, but I'm a big fan of factoring if you do it well. The factoring companies, so what they'll do is that they'll basically grab your P&L, the invoices that you've got out there. They'll own them. They'll collect the payments for you and provide you with them. They'll exert a lot of control. However, when done well, it can work very, very well for you. And the interest rates are not too bad. They're kind of 9-10% kind of stuff. They're not completely earthstress. And I talked to one factor guy earlier this week, and they do cash flow finance, and they're not putting interest rates up. They just took another bunch of cash ready to go out there to the market. They know what's going on. But don't forget, you've got to have customers to get that finance. So you've got to have sales in order to get that finance. So this isn't about supporting you when all your customers disappear. So that's anyone else has got anything to say on factoring?
Or just on factoring, I think I totally agree with what Lance has said, in that it's a really useful tool. There are other options in addition to factoring. You can keep and retain your invoices and not sell them to a factorer, but work with your bank or an invoice discounting house and still access finance under those invoices. Because again, it's a different risk profile, right? You're taking risk on a buyer who's contractually obligated to pay, and you probably know how risky they are. So there are definitely other sources of finance out there when you've got those invoices. So yeah, be it factoring or be it working with your bank and getting a trade facility are both great options. And that moves it away from that core working capital conversation and worrying about overdrafts to actually these specialist facilities, which can be another source of additional revenue for companies and a great way to actually grow your business once we've got through the survive and we're moving on to the thrive phase.
Well, I would say today is different from 6 months ago. And banks, I am not seeing any examples where it's actually been working for the companies. Fundamentally, it feels like the rules have perhaps tightened a bit and we're not seeing the loosening of cash. Tim, I'd love to understand your perspective from the numbers side from BNZ. And factorers do tend to be a bit more aggressive in chasing business. But the other factors are out there are independent individual investors, depending on the size of your business and the size of your investors, but people that will front you money based on invoices or based on a bit of land or something that you've got as an asset. That's another good source of finance at this kind of crisis stage.
Tim?
Yeah, I should probably say that we're supportive of invoice discounting, etc., because we do have an invoice finance product for a start, which is slightly different again, but it is in the realm of factoring, albeit controlled by the company in terms of collecting in invoices. We're also trying to release some easier to use product offerings in that space, which are coming soon as well, but not in time for the current scenario. In terms of credit tightening, Lance, to your wider question, I've actually been really impressed with what I've seen out of the bank, probably much more positive than I thought I would be in terms of seeing what support is going out. I guess with the factoring side, it's part of a context of all the facilities that might be in place for a company at a given time. And so I guess for us, it's an overall view all the time in terms of what's in play, and factoring is just one part of that. And so I guess just my only thing with that is if you've got a range of other facilities in place, just to think about how it fits in with those and whether that's a good play in the medium term as well. If you haven't got any other form of funding, yeah, definitely, it's a good option. And we do have an invoice financing product where we see there's opportunity to be able to put new funding into businesses as well. I guess the other comment I'll just make is we're actually pretty open for new to bank opportunities as well. They'll sit outside some of the government parameters, but we've fought pretty hard from a frontline banking perspective to make sure we're nice and open, and especially in that kind of tech and export space, which are two of our very high priority growth sectors from a bank perspective. So I'll just throw that out there as well.
Cool, thank you. Simon, any perspectives on this?
Yeah, I do. I didn't know if we wanted to labour the point, but I was going to try to tie this answer into a couple of the questions that have been asked as well, because I think that, to Pete's point, there are other options other than factoring, and it all comes down to understanding customers and potential new customers. So, for example, right, I sit inside government. NZTE is being directed to pay all invoices within 7 days. We've actually lowered that to 5 days. All right. So if you're looking, what's the purpose of factoring? It's trying to get cash into your business as quickly as possible. Breaking down your new customers, your existing customers with that traffic light system, I think is critical here. And you can apply the traffic light system to new customers. It's about understanding impairment and market. Now, it's not just the customer that you need to focus on, especially if you're a B2B or a B2B2C company, because you're going to then have to look one layer more. What are your customers? How impaired are they? What market are they in? And what sector are they in? And so you're going to have to get really, really granular on your customers and your potential customers to be able to then understand, what payment terms can I dictate? How much money should I be asking for up front? And so, there was a question here about, what rough estimate of the size of discount pre-shipping payment could be worth. It all depends on the customer. It's got to. You've got to make sure you can't have a granular one-size-fits-all approach at this point in time. And if you're looking to pivot business, then understanding that customer or that segment and what potential terms could come from it to free up cash flow is really, really important. Now, we started in this conversation on trying to create certainty in an uncertain time. Now, I can't emphasize enough that some of these tools that we're talking about can actually give you certainty. Yeah, it takes work and it takes a level of understanding, but there is ways you can create certainty in an uncertain time by traffic lighting your debtors and your current customers and your new customers, and then trying to put certain weightings on those so to help you with forecasting. And unlike Lance, I think that there is starting to emerge some degree of acceptance about, okay, firstly, what is an essential business in terms of customer base? And that seems to be growing slowly. And then what would those businesses be at level 3? What would they be at level 2? And we can start to put some estimates of timing. Now, even large banks like UBS have come out with some general assumptions. So assumptions such as lockdown period level 4 to forecasting for 8 weeks. Then obviously international tourism is impaired for a 12 to 18 month period, and a number of others that they've released into public. Now, you can take those and then you can get more and more granular, and you can start to build yourself some base assumptions on which you can start to figure out impairments to your existing and your new customer base, and then they can flow through to your cash flow forecasting. Now, if you're going to go to any external debt funder or external equity funder, or even to your existing equity funders, you're going to need to show them how you're going to weather the storm and the different scenarios that you're planning to manage, and when that length of that dip and when that rise is going to come. Now, it's foolish for us to try and do it on a general basis, because that just doesn't exist at the moment. It's got to be really granular on a company by company and a sector basis.
I want to answer Trevor Stewart's question, which is any tips on handling opportunistic discounters forcing your price lower? The answer is cash is king. But make sure you make a profit. But if you've got inventory sitting in the warehouse that you just have to ship and get cash, I would be going back to them and saying, sure, let's talk about terms, money up front before I ship, that sort of stuff. Make sure it's a one-off, but also consider what Simon said. It's going to be a different world, and maybe the prices do need to change. And as always with discounting, the answer is always going to be absolutely, I can give you that price that you want. Obviously, there are going to be a few features or things missing in that. So you can always come back at them with something different. There's a good question there about how do you get trade finance if you're a startup with a confirmed export order? And my own experience is that this is really hard. You do have Tim and you do have Andy out there whose job it is to help you with that. You've got to go through those sources, go to your bank and ask, and hopefully they'll play. And it is a bit of a lottery. If you're making money, if you're making profit, if you're a good business, they'll get the money. Otherwise, as I said before, look for high net worth individuals or other sources of finance who can kind of front you that order. And again, the best place to get that finance from is your customer. Mm-hmm. You got a $300,000 order, 100 grand up front, and then 100 grand free on board, and 100 grand when it's when it's commissioned. Do those sorts of deals. I'd give you a discount of $250K money up front. Right, those are the sorts of deals you should be playing right now. Cash is king.
So maybe just add to what Lance has been saying there. Look, for early stage exporters who've got confirmed orders, that's a space where we often help companies. So we often help companies land their first exporter. They may have their first sale, they're wanting to get insurance. The private sector might say, we're not going to cover your one-off shipment because it's not economical for them. That's often what we do. So we've got a book of really small insurance coverage because we're covering the first off insurance for an exporter to help them go into a new market, to get them comfortable with that buyer. We also often work with exporters where this might be a big step up for them. And the bank's saying, hey, we find it hard to help you go abroad. We want to help you, but it's a big step up for us too. And so we might be providing a guarantee to that bank to help them support their customer. So look, export credit, that's what we do, is helping companies export, and especially for newer or younger companies, if it's your first time, we can help with that, especially where there are confirmed orders. We've got due diligence that we'll undertake to make sure that it makes sense to us, but absolutely that's what we do, and you'll be happy to have a chat. There's also,
So my apologies for misnaming you. How long, what should a small company do and how long does this take?
Yeah, absolutely. So look, it depends on the solution that you're asking for. So if it's in relation to trade credit insurance, so you're looking to have insurance that your overseas buyer is going to pay. If the private sector has declined you because they're not happy to do it, look, I'd say we're 2 to 3 weeks to get that insurance. And so it's standard documentation, but we undertake a risk assessment. So we do your job for you in that regard, and we'll validate that your buyer is actually creditworthy before we're going to provide that insurance. So it's not gambling, it's a credit assessment. In terms of if you needed pre-shipment working capital, so you had this order that you've got to pay a bunch of your suppliers in New Zealand before you ship, and then you wait to get paid. So you're going to go to your bank for working capital because you didn't get a big enough deposit. That takes longer. That might take us 4 to 6 weeks because we don't know you. We've never worked with you before, and now we're going to have to act as a guarantor to a bank facility. And that's also a big part there, is that's a partnership. So that's not just us and the exporter, that's working in partnership with the bank. And the great thing is if you're working with a bank who understands their customer and they've already made them go through all the hoops, the information's all there, that can make it easier for us to look at them. The big thing we want to look at is your cash flow, because we want to ensure that you're going to be solvent for the duration of our guarantee, and we want to know how that facility is going to get repaid so our guarantee can be released. But absolutely, in terms of, is government there to try and help with that? Definitely. But look, we don't say yes to everything because it's got to stack up from our perspective as well.
So broadly speaking, given the fact that everything's changing so fast, do you expect the options for cash flow intervention and management to change radically over the next few weeks? Or is the selection we've got in front of us enough for our planning for right now? Simon?
Yeah, okay, I'll take that one. I think we'll see a couple of bespoke interventions still from central government, but we've seen from a macro perspective, we've probably seen about what we'll see. And obviously it all depends on the level or the period of lockdown going forward. Again, I'm all about creating certainty in uncertain time. I think we've all seen over the last, especially 3 or 4 days, that hopefully, touch wood, the evidence of community transmission and the rates of infection of COVID-19 seem to be slowing here in New Zealand, which is great news for us all. What it also does is it starts to firm up some of our abilities to create assumptions. And so if the lockdown does persist, I think you'll see maybe some extensions for the wage subsidy period, but I don't think you'll see large macro wholesale interventions. The ones that have been implemented by this government are quite similar to others around the world. You may see something in regards to commercial rents, some sort of intervention from government there. That's probably the only one I think I would see something. But on rents though, because we're talking a lot about sort of future and external sources of cash flow. I still think the key right now in a business is internal sources of cash and managing and getting right on top of them. So I know Lance said, stop. My overwhelming advice, having been a tenant in over 50 leases in my previous careers, is that whilst you may not always get on great with your landlord, same with your bank to a certain degree, not communicating or acting unilaterally is possibly the worst thing you can do. You must communicate. You have to at least propose certain solutions, even if they are a form of compromise that's uncomfortable to you and uncomfortable to landlord. You must suggest them and start a point of negotiation. Unilateral statements don't work.
We're privy to an email sent by a large accounting firm in New Zealand to all of their landlords across Australasia saying, we're not paying your rent anymore. We saw the warehouse basically say, we're not paying our rent anymore. So I absolutely agree with Simon. You do need to tell your landlord, just don't turn the payment off. But if you've got that particular clause in your lease agreements, activate it immediately and send them a letter saying, under this clause, we don't have access to our premises, 27.6, whatever it is, under the Auckland Law Society thing.
27.5.
And we don't want to pay our rent. The landlord will come back to you and say, hey, how about 50%? And now you're negotiating. And we've had different responses depending on how the business is going. Ourselves, we just played hardball. We said, no, under our landlord's Mark Hodgins, I don't think anyone knows him any favours. We're just saying, no, we don't have access, so it's 100%. Whereas other companies are doing deal with their landlords and so on. I do want to do a shout out for e-commerce. Someone, Hamish, mentioned that. Once it is one of our investments. They sell things, but they can't ship them at the moment, but they're still selling things. And that's the really important thing. People are still buying things. Obviously, revenue's dropped a lot, but people are still buying things, even if you can't ship today. So even if you can't get stuff made, consider getting out there, selling it. We'll ship it when we can. It looks like 2 or 3 weeks away. And you get that, depending on the kind of commerce you're doing, you get that money up front and it gets you the wages paid and so forth.
I would encourage companies to assume there's no further funding support and to seek all options now. As time passes, the impact on your financials is going to be more and more evident. At the moment, you can go to your bank, and the moment you can go to your shareholders with your March 30 financials, and it's hopefully showing still a good result and not too impacted by the COVID-19. But as time goes on, your monthly results are likely to be more shown, and investment dry powder and bank appetite may reduce if the crisis gets worse, or if your business is showing more and more impact from the period. So I would just encourage companies, even if you don't use your bank funding, having a limit in place, or even if you don't use your full investment support from your investors, having it in place is critical now to provide you that certainty going forward for liquidity.
If it's September, times are really tough, you're struggling, you've got a good business in there somewhere, but there's no money, no one's giving you cash, and you come to a venture capitalist, we're going to be faced with a lot of really good deals at that stage. So it's going to be if things are bad, so it's going to be an investor's market, which means the terms are going to be pretty tough. And the people that are cashed up, this is what they wait for. The really smart money is in cash right now, and they're waiting until September, because that's when they'll see their good investments. You don't want to be lining up for money at that stage unless you're in great shape.
Okay. Sorry to labour this point, but if you are going to external providers, and for sources of cash and shareholders or banks, preparation is key. Don't turn up with a half-assed, operationally built forecast that doesn't accurately describe how you're going to get through a hole and into a recovery. Don't turn up with a document that contradicts some of the key assumptions in your model. So I just be prepared. I totally endorse what Nadine and Lance are saying, but be prepared, do the work beforehand, make sure you put yourself in the good light.
There's no escaping the hard work that's got to be done in the short term to get prepared for where we're going. Hey, we're right on time here at 10:30, and it's time to let everybody get on with their day. Just before we leave you, I'd like to turn to Tim and the bank to have the last word on this, and just give us a reason to be cheerful amidst what we're talking about. You're on mute.
I better unmute to get started. Yeah. So I totally agree with some of those comments. Again, just here's our cheerful thing. We're seeing a lot of positive stories coming through. We're seeing a lot of bank support going in where it's appropriate. As Simon said, yeah, please come prepared, because it makes things a lot easier. And if you're prepared, we can help really quickly, or we can let you know that we can't help really quickly as well. So at least you know where you stand. And I think knowing where you stand and what your options are as early as possible is the best thing you can do.
Well, that's wonderful. Thanks, Tim. Well, thank you so much for joining us, everybody. And a huge thank you to Simon, to Tim, to Nadine, to Lance, and to Peter for all your insights and taking the time to share that today. We're going to be back again next Friday with a new panel and a new topic, starting to pivot towards the places of value and looking at ways to stretch and start to drive that top line again, or at least to understand where it's coming from. So from the panel and from Hamish and myself, have a very, very lovely day. We'll see you next week.
Thanks for having us.
Yeah, hey, thanks everyone. Well done. Appreciate it.
Thanks, guys.
Cheers, thank you.
Thank you.